I eat exactly what I like to eat. If I liked it on my 6th birthday, at my 6th birthday party when we had hot dogs and hamburgers and Coke and ice cream with chocolate, I still like it.
Warren was a shy and quiet boy who spent most of his childhood alone, often reading books from his father's library.
I'm probably one of the few CEOs that actually enjoys writing the annual report.
Just think about it. A 6-year-old boy going around the neighborhood selling chewing gum to people. He had no idea that this was the beginning of what would one day become a multi-billion-dollar business. That's how Warren Buffett's amazing story started. He didn't just wake up rich one day, he worked for it, starting with small businesses when he was just a kid. In this video, we'll share some secrets from Warren Buffett's life that helped him become one of the most successful financial minds in the world. Let's find out the hidden facts about Warren Buffett that even some of the gurus are not aware of. Buffett's strategy is straightforward. It revolves around buying good companies at reasonable prices and then holding on to them for the long term. He often says that his ideal holding period is forever. This long-term perspective allows him to stay calm during market fluctuations and focus on the true value of the businesses he invests in. Unlike many investors who actively trade stocks and try to predict market trends, Buffett takes a more laid-back approach. He waits for the right opportunity, knowing that his investments will grow over time. Now, here's something you might not know. Warren Buffett was a smart kid with a knack for business from an early age. Growing up in Omaha, Nebraska, Buffett wasn't your typical child. He was already a budding entrepreneur. He started by selling chewing gum, Coca-Cola, and magazines door to door. Even as a young boy, he had an eye for what people wanted and how he could make a profit from it. It wasn't just child's play, it was the beginning of a lifelong passion for business and finance. While other kids were learning to ride bikes, Buffett was learning to sell, negotiate, and understand the concept of profit. This early start set him apart from his peers, giving him a head start in the world of business. As a teenager, Buffett didn't limit himself to small sales. He took on more serious ventures, like operating pinball machines in barbershops. It might seem like a simple business, but it taught him valuable lessons about risk, reward, and choosing the right business partners. By the time he was in high school, Buffett had saved more money than most people do in a lifetime. His early ventures weren't just about making money. They were about learning lessons that he would later apply on a much larger scale. But what really made Buffett stand out was his early interest in the stock market. At just 11 years old, he made his first investment, buying 3 shares of Citi's Service Preferred. It might seem like a small and insignificant deal, but it was a huge moment for Buffett. He watched the stock drop and then bounce back, learning an important lesson about patience and the ups and downs of the market. This experience laid the foundation for his disciplined, long-term investment approach. Not all of Buffett's early investments were winners, but they were all learning experiences. He learned how to analyze companies and the market, but more importantly, he learned how to manage his emotions. This ability to stay calm under pressure became one of his greatest strengths. While others panicked during market crashes, Buffett kept his cool and saw opportunities to buy good stocks at lower prices. This strategy of buying when others were selling became one of his signature moves. Buffett's passion for business took him to the Wharton School at the University of Pennsylvania during his college years. However, he soon realized that what he was learning wasn't what he wanted to pursue. So he transferred to the University of Nebraska-Lincoln, where he completed his business degree. But it was his time at Columbia Business School that truly transformed his life. There, he studied under Benjamin Graham, the father of value investing. Graham's teachings had a profound impact on Buffett, giving him the tools to select companies with strong potential. Research shows that he adopted Graham's principles of value investing, which became the cornerstone of his investment philosophy. He absorbed all of Graham's teachings on the concept of intrinsic value and the margin of safety, which is the process of acquiring stocks at a price lower than their actual value to minimize risks. These principles formed the basis of Buffett's investment philosophy that he was to follow for many years to come. Graham was not only a teacher to Buffett, but also a role model whose perception of the stock market shaped Buffett's view. In 1954, after completing his education at Columbia, Buffett joined Graham at the Graham-Newman Corporation in New York. This was a dream job for Buffett, who had always been a fan of Graham's work. While working there, Buffett honed his skills in analyzing companies and looking for undervalued stocks. However, when Graham retired in 1956, Buffett had to think of what to do next in his life. He did not remain in New York, but went back to Omaha and formed his own investment partnership. This was the start of his career as an independent investor. The beginning of Buffett Partnership Limited can be considered a significant milestone in Warren Buffett's career. He applied the principles of value investing that Graham had taught him to identify and invest in undervalued businesses. It did not take long for the partnership to attract attention due to the high returns that were generated, and more people wanted to invest with him. Buffett's strategy was simple yet effective. He emphasized research, made long-term investments, and never left without a margin of safety. It was not just a matter of being lucky, but being smart and knowing how to go about it. How business was done. An example of one of Buffett's first and significant investments was in a textile company, Berkshire Hathaway, which was in a poor financial state at the time. Despite the fact that the textile industry was shrinking, Buffett found the company's assets and management to be worthwhile. He began to purchase shares and later on became the owner of the company. But instead of concentrating on the declining textile industry, Buffett employed Berkshire Hathaway to acquire other companies. This decision revolutionized the future of Berkshire Hathaway, transforming it into a diversified conglomerate and one of the most successful companies globally. Buffett's approach to Berkshire Hathaway was to acquire companies that were well managed and had good earnings prospects. He was not a fan of the new economy, high-growth technology shares. He wanted companies that made money. This approach resulted in buying stocks in firms such as Coca-Cola, American Express, and GEICO, which are among the most profitable investments ever made. Buffett was unique in his ability to select these companies at the right time and place. He was not merely investing in shares, he was investing in companies and he held them for the long term. The other important aspect of Buffett's approach is his emphasis on the so-called moat. In business terms, a moat is a competitive advantage that shields a company from competitors. It could be a strong brand, a new product, or a monopoly in the marketplace. The criteria that Buffett uses to select stocks to invest in are the ability of the company to sustain high levels of profit in the future due to a wide moat. This made him buy stocks in companies such as Apple and Coca-Cola, since they are popular and have a worldwide market. However, the real talent of Buffett is not only in the search for such stocks, but in his ability to remain patient and not deviate from his approach. He does not follow trends or attempt to forecast the market. For instance, Investopedia shows that he is well known to have missed early chances to invest in companies such as Google and Amazon because he did not understand their business models. Though some people may have an issue with this, Buffett's moderation is one of the reasons for his success. He only invests in businesses he knows well, and this has saved him from getting into wrong investments more than once. Warren Buffett's investment strategy emphasizes patience, discipline, and value understanding. He seeks companies with solid financials, moats, and a margin of safety. His approach has led to a successful career. Beyond wealth, Buffett has shared knowledge through letters and speeches, benefiting aspiring investors. His story showcases dedication, respect, and timeless investment principles. So when you think about your financial goals, remember that the best investment you can make is in yourself, as Warren Buffett has shown time and time again. Whether you're new to investing or have been at it for years, there's something in Buffett's approach that can inspire and guide you on your journey. Let's talk about your thoughts in the comments.